Wanted to welcome attendees as they're joining the call. This Northwest Colorado Critical Business Updates for Business Owners. If you're returning, welcome back. If you're new to the call, just wanted to orient you give you a little audio so you could check your sound, and to let you know at the bottom of your screen, you should see a Q&A menu there. We're really welcome and hope you'll be sharing your questions with us. It'll help the presenters know what to speak to, and when we get to the Q&A section at the end, we'll get a chance to respond to those. So we'll get started in just a few more minutes, but just wanted to welcome you as you join the call. Just want to welcome everybody who's just joining in for the Friday call, the Northwest Colorado Critical Business Updates for Business Owners. Welcome back if you've been joining in previous weeks, and for those that are just joining for the first time, wanted to give you a little audio to make sure that your audio is working and orient you to the Q&A feature at the bottom of your screen. You might have to scroll over it. Would love to get your questions that you want to hear the panelists speak to, and that we'll be able to take in the Q&A section at the end. If you are new to Zoom, don't worry, you are muted as you join and there's no camera on, so you can remain comfortable wherever you're viewing, and panelists will appear on your screen as they present. We'll get started in just a minute here. And I'll pass it over to you, Aaron, whenever you want to get us going.
Okay, yes, let's get started. I'm Erin McCuskey. I'm the Regional Director for the Northwest Colorado Small Business Development Center. Thank you for joining us again this week. Probably many of you were with us last week, and you know that we're going to be hosting this call weekly in order to stay updated on the rapidly changing information that we're all trying to download and digest. So we'll see perhaps a slight change to the format of these calls starting next week, where we might start combining things to be able to go into some more singular topics more in depth. But just stay tuned, keep an eye on the SBDC website, and watch for those emails that go out so that you can be sure to join us at the right time. So I want to first of all mention that this call is being recorded. It will be posted on our Northwest SBDC website. So you'll be able to find the recording, the slides, and the follow-up for some of the common questions posted at the website soon after the conclusion of this call. I want to also ask all participants to please use the Q&A function rather than the chat in order to submit your questions. And we will have time to be able to go through questions today. So definitely get those questions in through there so that we can get your question answered live. Let's go ahead and look through the agenda. Next slide, please. Perfect. So today we're going to do a bit of a deeper dive than we were able to do last week regarding the Paycheck Protection Program, or the PPP. So we will be joined by Francis Padilla, who is the Colorado District Director for the Small Business Administration. We're very fortunate to have her knowledge and expertise available to us to answer questions live. We're also joined by Nicole Christensen, who's with Colorado Lending Source. So Nicole has been working with many banks and getting to know the common applicant experience for the PPP, and so her perspective will be very helpful to learn more about. After that, we'll go into a cash flow planning discussion, because that's one thing that even as business owners are waiting for their loan funds to come through, they can be actively working on some cash flow management strategies. And so Dale Jasinski, who is a consultant and professor and small business owner, is going to go through some tips that he's been sharing with the clients that he's been meeting with over the past few weeks. And we'll wrap up with that live Q&A. So I think that from here, I'm going to turn it over to Frances if she is on the call. Give us just 1 minute.
Hi, Erin. I'm on. Oh.
Perfect. Thanks, Frances. You can probably hear that it's echoing a little bit, so maybe turn off the sound on the computer, and then we'll probably be able to hear you. Are you there?
Okay, Erin, I'm back on. Oh. Oops. I'm actually on my phone.
Do you have the computer volume on?
No, it's completely off. Give me 1 second.
Okay, 1 second, everyone. Thanks. Learning about technology together.
Okay, Erin, is that better? Erin?
It sounds perfect. Yes.
Okay,
perfect.
wonderful.
Thanks, go ahead.
Sure. Okay, so this is actually through my computer, so I'm so very sorry if you hear the trash truck or any dogs barking, but I think we're all getting used to that, right? And that's becoming the new norm. So thank you so much for having me on. I apologize for being a little bit late. I just jumped off of the last one I'm on that I was on that went a little bit over. So I'm here today and I want to thank you so much for having me. I want to give you a few updates on the SBA resources and the programs for small businesses from the SBA. From the beginning, we've these programs have kind of been changing and shape-shifting and evolving over time. And I think the real intent is to try to clarify as many rules and some of the processes in effort to assist as many small businesses and private nonprofits as possible. So I apologize for all the shifting guidance, but I think that really is the spirit and the intent. So I want to go through a few of those today. The first ones I want to go through are really about small business debt relief. This happened prior to any of the Coronavirus Act or the CARES Act. If you already had an SBA disaster loan, not connected to this economic injury disaster loan under COVID, but a prior disaster loan, could have been a physical disaster, could have been an economic injury that happened sometime in the past, and you're still paying as agreed as an SBA disaster loan client, the administrator opted to waive all of your disaster payments for the period of the next 12 months. It's nothing you need to do. It's done administratively, but if you were expecting to pay your SBA disaster loan, it will be deferred for a year. The next part actually happened under the CARES Act, and we call it the Small Business Debt Relief. And this is for anybody who has an current SBA 7A loan, Community Advantage loan, SBA micro loan, or a 504 loan. So borrowers will actually be relieved of the obligation to pay the principal, interest, and any associated fees that are owed on these loans that are in regular servicing status. So they have to be in good standing. You have to be paying as agreed. We will make those payments for you for a 6-month period, beginning with the first payment that's due after March 27th. Again, you do not need to do anything. This is an administrative function between SBA and our lenders. We're sending them guidance right now on what they need to do to gather that information to send it to us so that we can make those loans on your behalf. If you already made a payment, again, this is on your 7A, Community Advantage, or SBA microloan, or the 504 loan after March 27th, there is one thing you could do, or we'll have to make a decision on, and that is your lender will give you the option of either returning the loan payment to you or applying that loan payment to further reduce the loan balance after we make your 6 months of payments. Again, that's your decision, and we're providing the guidance to the lenders on that method. The one caveat is if you do have an SBA 504 loan, the CARES Act only covers the SBA portion. So as you know, a 504 loan has a third-party lender, first mortgage holder, and then it's partners with a CDC that does 504 loans on our behalf. The payments will apply to the SBA portion, the 504 portion that we own, that the CDC administers. So the next I think that people would be interested in is maybe a little bit of an update on the economic injury disaster loans and the economic injury disaster loan advance programs. So prior to the act, or the CARES Act, the economic injury disaster loans were activated under the Coronavirus Response Act for the first time for a pandemic or a biological event. Never have we seen our economic injury disaster loan program used for something of this scale. And the system at the time was really kind of a server system. So there were a lot of hiccups where people who were applying were, answering questions and having to upload a lot of documents, and sometimes the documents would get stuck. And seeing that this was not going to be an efficient way to do this, or an effective way to do this for a nation full of applicants, the SBA kind of stopped for a little while. They put an interim system in place where you could download the documents, fill them out, and then upload them back to a Dropbox. We call that, EIDL 1 and EIDL 2. So those were the two first ways of processing. And the reason you need to know that is it's important. After those two processes were put in place, the CARES Act actually passed. And the CARES Act gave applicants the option to go back in and ask for what we're calling EIDL advance, which is really an emergency grant. So this is up to $10,000 per each applicant. In those first two application phases, you were not able to opt in for EIDL advance. And we wanted to make this fair because we did say first come, first serve, and that wasn't available when you applied perhaps. So what we did do in the last 2 weeks is we asked, and applicants were automatically notified by email if you provided that there's a new system, there's a new streamlined process. What you needed to do was take your application ID or your applicant number, go back into the new streamlined process and opt in for EIDL advance if you wanted to try to take advantage of the emergency grant. So what the SBA was cleaning out the first come first serves in that first stage, cleaning out the EIDL requests in the second stage where you upload it, and now we're on just going through the EIDL requests that started with the new streamlined process. The new streamlined process, if you don't know, looks like basically almost like Rocket Mortgage type or TurboTax type of a situation. You go in there and you fill out about 4 or 5 screens, answer a bunch of questions about your business. About on screen 3, you're going to say you want to opt in for EIDL advance. That's the grant part. And then it'll process you through and it will shoot out a loan ID or an applicant ID. You need that number. So if you've been wondering what the status of your application was, if you remember, we had 2 different processing methods before. In the beginning, you used to be able to go in online and check your status, but since we've come off those platforms, the only way that you can check your status right now is to use that applicant ID or the application ID, and you can call customer service at SBA Disaster or send them an email with that application ID and ask for the status. Unfortunately, there isn't anybody in a field office who has any visibility or access into that system. So my office can't check that for you. Unfortunately, the SBDCs can't check that for you. The only way is to call customer service or send an email to disastercustomerservice@sba.gov. Let me give you that number. It's 1-800-659-2955. Again, 1-800-659-2955, or send an email to disastercustomerservice at sba.gov. That's probably the number one question that we're getting in my office is how do I check on the status of my EIDL advance and my EIDL loan? And that right now is the only way to do it. However, I think I do have good news for you today. As of yesterday, we have heard that the EIDL advance, again, that's the emergency grant portion, are starting to tangibly move through the system. So if you're an applicant and you gave them your email number, hold on one second, let me turn this down. You will get a notification. It's usually an email if that's what you provided with an offer of a grant amount. So then you will verify your information and you'll verify the accounts that you gave. And when you're successful and you're notified, when you are notified after you've done that verification, the money should start hitting your accounts within a couple of days after that process. So that is moving now. The loan part of the EIDL request will continue processing. So at that point, let's say you need to make some changes to that EIDL loan application that you put in, or you didn't get a chance to actually upload or discuss anything with a loan officer because you did the streamline method. That's the point where you will be in the queue assigned to an actual loan officer, and you'll be able to have interaction back and forth with the loan officer. So if you need to make changes on an application or whatever, questions that you answered, that would be the time that you can do it on the loan side. Again, it's your choice. You can go ahead and call the 1-800 number, and unfortunately you might be told you are in the queue, number 10,000 in a queue of however many, or you can wait for the email. But I think the best thing to do, in my opinion, is just wait for the next couple of days. There were literally millions of applications that have gone through this system. So again, I'm happy to say it's starting to move. Some people in Colorado have shared with us their experience. They've even shared with us what their offer looks like when it comes back on the EIDL grant. The one thing that you'll want to know is that probably wasn't conveyed very clearly is this is up to $10,000. It's not $10,000 for everybody, it's up to. And now we have clarification on what that's based on. So you'll get an email and it will basically say, to ensure the greatest number of applicants can receive assistance, the amount of the advance is going to be determined by the number of small business pre-disaster employees. That's as of January 31st. So pre-disaster. And then the advance will provide $1,000 per employee up to a maximum of $10,000 in grant. Again, remember, this is the grant. You don't have to give it back. You don't have to even go on with any of the other loan processes if you don't want to. It might be in your best interest to stay in that queue and to answer the questions. It doesn't cost you anything. If you don't want the loan after they've processed on the EIDL side, you can just say, I don't want the loan, but the grant will still stand. You will still be able to take those grant funds with you. So that's where we are on EIDL Advance and on the EIDL loan program. The next program I want to give you an update on is the Paycheck Protection Program. As you know, on March 30th, SBA and Treasury rolled out a new program called the Paycheck Protection Program, which is called PPP. And for me, it's actually hard to believe that it's only a week old. They say Rome wasn't built in a day, but we built PPP in 5. So yes, there are challenges. I totally understand that. And there were challenges in the rollout. However, if we all just kind of take a step back and think about it, it's amazing that a whole federal program with $360 billion in it was rolled out in less than a week. And so I apologize if there were, any challenges for you in trying to get the forms and access and doing the preparation. But I can tell you that Colorado lenders all last week were furiously entering applications into our system. I don't have numbers for Colorado specifically, but I do have numbers as of yesterday on how much has been approved in PPP. It's basically 500,000 loans valued at $130 billion were approved, and that was done by 4,000 lenders nationwide. So it's proof that obviously small businesses need this help. And I know there was, a lot of questions about what lenders were playing and what lenders weren't, but most of the Colorado lenders really did work through the weekend, worked at night. I know because I was answering their questions on Sundays and at 9 o'clock at night. And they really, really, really wanted to show their support for those applicants and for their clients. Just a reminder, this is a 100% SBA guaranteed loan. It's delivered covered by the lenders, unlike the Int'l loan, which is an actual direct SBA loan. And it's designed to provide that incentive for small businesses and private nonprofits to actually keep their employees on payroll. So the program is for small businesses and nonprofits generally with less than 500 employees. The loan amount that can be requested is based on payroll costs and some fringe for the last 12-month period. So it's actually an average of your monthly payroll costs plus some fringe divided by 12, right, to get your monthly, times 2.5. And then on top of that, you could add any eligible overhead, which is mortgage interest, utilities, some rent. And then if you actually took an Int'l loan, then that money would be rolled into that calculation as well. And that's how the loan amount is determined. The loan payments, if there's any loan payments to be made, they will be deferred for 6 months. There's no collateral. There are no personal guarantees required on this. There's no credit elsewhere test. The government and lenders won't charge any fees to small businesses. If there's a loan repayment portion, then it would have a maturity of 2 years and an interest rate of 1%. And I say if there's a loan payment because these loans actually do come with the ability to be forgiven. So SBA will forgive loans if all employees were kept on your payroll for the 8-week period following the first disbursement, and the money was primarily used for payroll expenses. So it'll be fully forgiven if you used 75% or more of the funds for payroll costs. You can use the funds for payroll expenses and some fringe, plus some overhead, again, rent, mortgage interest, utilities. But if you utilize the majority of it for at least 75% for your payroll costs and you keep people on the payroll, then the loan would be fully forgiven. So when can you apply? Last Friday, small businesses and sole props started applying. This Friday, independent contractors and self-employed individuals can start applying. There are some caveats and rules about size and who the eligible applicants are, but for the most part, I think we've all heard a lot of information in the last couple of weeks. And so I'm going to give it back to Erin and stand for questions.
Thank you, Frances. I want to ask just a couple great questions we had right now. So can you speak about the lender caps and how some lenders are not able to accept any more applications? Is there any action to ease the caps?
Sure. Let me see if I can try to explain this. So SBA does not have caps on any lenders. We did not say there's a pot of money for this lender and a pot of money for another lender. If a lender is trying to risk mitigate, they still have their regulators to answer to, right? So if a lender is trying to risk mitigate, they have to do the math to figure out how much capacity they actually have in terms of meeting their liquidity requirements by their regulators. So sometimes they have to figure out we have to stop lending up to a certain point. That's really what the cap is about. It's about the lender's liquidity and not anything the SBA is doing. In terms of adding new lenders, the way it worked in the beginning is we said, and under the CARES Act, it said those lenders that already have a 7A or a participation agreement with the SBA, you can opt in to be a PPP lender. The things that we're going to ask you are to make sure that you're in good standing with your regulator, and then we're going to ask you to opt in, and then you can just go ahead and go forward. So that included federally insured institutions, credit unions that were federally insured, and Farm Credit Administration institutions that were on the books with SBA already. So that was the first round of lenders that could just get going. The second round of lenders that could apply were those that are in those first three categories, federally insured, credit union insured, or farm credit, that didn't already have a participating agreement with SBA. They could apply to start doing PPP loans. In the last week, we actually have added 20 of those lenders in Colorado. The one thing I'm going to tell you is just please be a little bit patient. This is not to be disparaging, but they're kind of SBA newborns. right? So they're not real, they haven't really done SBA loans. And so we need to give them a little bit of time to be onboarded, to be trained, to get access to the systems, to figure out, how they're going to lend and what their processes are going to be. But there should be an additional 20 lenders that should be coming online and starting to take applications. And I know one of the questions is going to be, can I provide a list? Unfortunately, I cannot. I can tell you that those lenders that are in our resource guide on our website are already participating lenders, and most of them have opted in. And, I just saw how tirelessly, again, the Colorado banking community really worked, and it's so many of them really did kick and scream to make sure that they were getting access to PPP. So those are the first 2 rounds of lenders. The third round of lenders will be non-depository institutions or non-federally regulated lenders that can start making applications. So these might be some fintechs and other mission-based organizations that have the ability to do small business lending.
Great. Thank you so much, Frances. Speaking of lenders, we're going to go ahead and turn it over to Nicole Christensen from Colorado Lending Source, who can continue on this topic of the PPP and more. So Nicole, we'll have you take it away and go ahead and advance to the next slide.
Thank you, Erin, and thank you so much to Frances from the SBA for being a part of this call. It's been tremendous to see the SBA step up and do this so quickly. I've been in SBA lending for 13 years, and I've never seen anything like it. So there were bound to be, a few things we had to navigate, but truly an amazing effort as a result of the CARES Act, and then the Small Business Development Center, Office of Economic Development, Startup Colorado. I appreciate all of you that are working to get resources out there and information into people's hands. You're all moving so quickly. It's so inspiring. I am kind of one of those that gets dragged along, and I appreciate you keeping up with all of that. I just truly appreciate this effort on behalf of our small businesses in Colorado. So I'm Nicole Christensen with Colorado Lending Source. We've been around for 30 years. We have 4 different loan programs. 3 of those are in the SBA world, and then one of them is not. So we have a lot of experience with SBA. We help both banks and borrowers access these funds. I do appreciate Frances mentioning the relief for existing SBA loans. I've yet to see that anywhere on the nightly news, but that was tremendous for folks that already had SBA loans, and that was immediate, starting April 1st through September 1st. They will have their payments made out of the CARES Act, and it's not due later on. So that was amazing. I definitely want to put a shout out to our banks as well. I don't know any banker who didn't work this past weekend, and some banks have instituted 24-hour shifts. So truly an amazing effort. It's really neat to see how the PPP program is designed to be done through our lenders versus, the more centralized EIDL loan. It's, that came with its own challenges, and it just makes so much sense that every community bank in Colorado had the option to help their businesses with these PPP loans. It's just such a great design for a loan program that could quickly get funds out into a community. So in general, there's some information here on this first slide that is some of the information that was also on the blue comparison slide. A bit more detail about how seasonal employees might be calculated for these businesses that are applying for the PPP loans. One thing I wanted to mention regards to seasonal employees, I did talk to a business in the Vail Valley, and they have some employees, I forget the name of the status, but they come from other countries and they work over the ski season. One of the questions on the application is if all your employees are residents of the United States. Again, their address is U.S. Address. And so those folks would not count. They'd have to be backed out from the payroll calculation. So that's one thing that only applies, I feel like, in resort areas, but that's something to know. The business is certifying that their employees all live in the U.S. So next slide. A bit more detail about how the payroll calculation is made. That's going to be important for the small business owner to take the time to really get that calculation right. There are some calculators out there. We have one available. You'll want to have this information detailed in how you came up with the number, because the general idea of this loan program is you're doing your best effort to calculate this correctly and thoroughly and providing the documentation behind that So that's a really important piece of this loan. The application's pretty short, so it's really coming back on this payroll documentation that you'll provide for your lender. Again, these loans are available directly through your bank, and this idea that the bank you already work with is the most likely place for you to go for these loans. Next slide, please. As Francis mentioned, today we now have the ability to take applications through banks for the PPP loan. The calculations are a little bit different, but again, some more information here about how that will be determined and what's not included. And again, this idea of just, you know, working with your bank to make sure you document things and you're doing this correctly based on how you understand it. This is kind of your best faith effort in application, and then your banker is making their best faith effort to review the documentation and certify that they understand what you've done and that it's done correctly. So that's a pretty big piece of this loan program that you're agreeing to. And then I wanted to go over, our executive director was a part of an article in the Denver Business Journal that came out yesterday, it looks like, no, 2 days ago. And they had some kind of do's and don'ts and tips for the PPP application that I wanted to share with the group because I thought it was helpful. First of all, trying to type in your application form. So there's one, I think, 2-page application form for this PPP program. Handwritten is just a challenge. It's a challenge to read. It's a challenge to scan. So please, you know, do your best as a small business owner that wants to apply to find a way to type into that application. It just makes it a lot easier. And then your background documentation, your backup documentation for things like payroll and your calculations, if that can be in a spreadsheet or something very easy to follow, that just helps everybody so much because these are moving quickly and they're, you know, they have a lot of them to process. So as much as you can make the process easier for your banker to follow, the better. The next thing is not to assume that your banker understands your payroll process. There's lots of different ways that this is set up, and banks aren't used to looking at payroll. There's no real loan right now, before now, that calculates a loan amount based on payroll. So the documentation is kind of new to bankers. So again, being organized and thorough with the documentation that you provide and being able to explain it very clearly to your bank will help you in the end. Definitely have your application documents ready. So you'll start by applying to the bank that you already work with, and each bank has a slightly different list of documentation that's required. So it's important that you go to your bank and ask for their list of documents to apply, and that you complete a full application, check all those items off in your packet, and then go back to the bank and actually apply. Incomplete applications are just a really hard thing right now with the volume. So that will be in your best interest. Again, if you come with a complete application, that will help you get the funds faster as well. You know, this idea of filling it out yourself and not expecting the banker to fill it out, as helpful as all of our banks are, especially on the Western Slope, they just don't have the time. So you do your research, you fill it out the best you can, explain it very thoroughly, and then go from there. So, you know, the banks just aren't going to have time to help fill this out for you. And then finally, that idea of being patient with your lender. They're all busy. They're all working extra hours and weekends to get these funds into our communities. So try not to panic and start calling other lenders. It's really going to be, you know, most of the time best for you to work with a bank you already have a relationship with. So just know that that is the case. And I know it's urgent to get this money in your hands, but to give it a couple days for the banks to process your application and get back to you. And it's not going to help to call every bank in town necessarily if you're already starting with your bank that you have a relationship with. So that was overall what I wanted to share, and can answer questions in a bit.
Thank you very much, Nicole. We will come back to questions at the end. And so right now I'm going to turn it over to Dale Jasinski. So we can go to the next slide, please. Oh, I'm sorry, I skipped a slide. First, we're going to have Kat speak very quickly about some of the resources that are available for agriculture. My apologies. Turn it over to Kat for just a quick minute.
Yep, no worries. It's just going to be a super quick minute, but we wanted to honor that we had promised all of you some agricultural updated information from last week. The big news is that the guidelines for distribution of funding under the CARES Act via the USDA have not come down yet. The Colorado Department of Agriculture and the Farm Services Administration will jointly announce that as soon as they come out. So a lot of the resources that you kind of see on that page are going to be pretty similar to last week's. FSA has definitely stood up a little bit more on their COVID-19 resources page, which is that second link on there. The Colorado Department of Ag had a really great town hall yesterday with a Q&A. And so we're going to make that little Q&A worksheet available after the meeting. But we're definitely still working on those larger guidelines. But big piece just to kind of tie into the PPP is that ag producers are able to apply for that one. And just to remember, you know, cannabis inclusions, hemp is covered, marijuana is not. So just a super quick overview, but feel free to use that slide and refer to the Q&A, and we'll have more coming as soon as the guidelines come down.
Thank you, Kat. And once again, this will be posted in a variety of places on the Northwest SBDC website, and you're also able to download the slides right now so that you can see the links that are on this slide. Okay, now we will turn it over to Dale. So next slide, please. And so really quickly, Dale is an associate professor of entrepreneurship and strategy at the University of, and I should have asked him how I say this word, but maybe he'll say it for me. He's also the owner of several businesses, has worked as a CPA in the past, and he's an SBDC consultant. He currently lives in Grand County, and he's going to spend about 10 minutes doing an overview of cash flow planning. Have you take it away, Dale?
Great, thank you. It's Quinnipiac, so you probably have heard of us from our polls and hopefully also from our awesome hockey team. So when I'm not back in Connecticut, I live here in Fraser, and that's where I'm coming to you today. So next slide, please. So I grew up in a family business. My dad, I grew up in Arizona, went to school at Northern Arizona University in Flagstaff, got my PhD at CU down in Boulder. And growing up in a family business, you know how important cash is. Vacations happen when you've got cash, and you don't go anywhere if you don't. And that's never been more true now. We've been very lucky here in Fraser Winter Park to be getting to work with a bunch of our local businesses for the past week. And first of all, I just want to shout out again to the SBA. I was working with a restaurant here yesterday. The loan forgiveness for his existing SBA commercial loan has made all the difference. I mean, it lowered his stress. It has really given him a runway to be able to look for the future. So shout out for that immediate relief. The cash flow is all about how much money's coming in, how much money's going out. So one of the things we're trying to work with our clients here on, and we'd be happy to work with you guys on, is how can you start to continue to get cash? Nobody's going to pretend that this is dollars. These are pennies, but the pennies can add up to give you a little bit more breathing room. So if you haven't done gift cards, discounts, etc., start thinking about those things. We talked a little bit already about deferring payments. So many of the credit card companies are offering you deferrals right now, no penalties, no interest being charged. Taxes, some of your payroll taxes. We talked already about the SBA loans, but also at the Fed level, some of the payroll taxes are being deferred right now. So start thinking about ways you can stop making payments. It's important to talk to the people that you're suppliers with. Again, we've been working with probably 7 restaurants here. They obviously had a lot of food ordered for spring break that didn't happen. And so they're working out payment structures right now. Burn rate is probably, again, it's a quickie calculation. How much money are you going to go through each month? If you haven't gotten that down, make sure you start with what it was and try to figure out how to make it less. Probably the single most thing that y'all are doing is with employees. That represents a lion's share of it. So I think last week's was a great example of what this webinar of trying to make it show you how what your options are when it comes to reducing your payroll costs. And then increased runway is all about making sure you can stockpile as much money to last as long as you possibly can until we get some sort of all clear signal. So the other thing I would say about reducing your burn rate, think about what other personal expenses you can cut. For example, your cable bill, your internet bill. Some of those providers are willing to offer you breaks. Maybe there's no live sports, so get rid of that sports package right now that you've got on your cable. Next slide. So first thing I would do is make sure you're staying close to your customers and suppliers. No matter if that's going to be through some social media. So one of the bars is having customers post content of things they used to take pictures of when they had been visiting there. So that as a way of trying to maintain that connection. You're not coming right now to have a drink with us, but post some pictures of when you did some good times. And so try to figure out ways that you can stay close to your customers and suppliers. And again, talk to them about different options. Some people have actually been getting donations from customers to say, we want you to be here when things get back. So first and foremost, do that. Manage your accounts payable, your accounts receivable, and inventory, especially for some of our seasonal businesses. We've worked with a couple of ski shops. You know, you're having to make orders or have made orders already for next ski season. How can you, work with those folks to figure out the best ways to handle that? If you're owed some money, again, this might be a time to offer some sort of discount to get that cash in now. Then from the entrepreneurial perspective, start thinking about some new customer segments. So you probably read or saw in the news, Panera is now selling groceries. You've probably seen that barbers are offering, I don't have that much of a problem, but barbers are offering programs where they'll help you cut your hair at home. We have a bakery that we're working with that has come up with a new way for online ordering and delivery. And they're also offering incentives that if you buy so much bread from them, they're donating so much bread to a food shelter. So try to think about serving customers that you haven't normally served before, and maybe serving them in ways that you haven't done before. To again, try to get some amount of cash flowing in while the times are hard. Another great one, especially for those of you who have a lot of equipment, is think about, is there a way you can sell some of that stuff and be able to lease it back, which would get you some cash now and be able to have a lower cash out for a little bit. And finally, make sure you've reviewed your insurance policies and coverage. USAA, who I work with, was very proactive in coming back and saying, here's some examples of you're not driving as much, so they can reduce your miles. And if you reduce the miles you're going to drive, that's going to save you money on your policy. You can put vehicles in storage. So some of the things that you used to be using on a daily basis, you're not now. So also take a look at your business interruption insurance, see if there's a clause there that might be triggered that could get you some cash now. Okay, and let's go to the last slide for me. And start thinking about what the world's going to look like when we start to emerge from this. I mean, I think you're going to see some sort of staged response where some people are going to be willing to come back sooner than others for whatever reasons. And so start thinking about what that working capital is going to look like when the folks come back up to the mountains if you're in the tourism side of things. Again, this is mud season. We have fall. So many of you, and again, it's been just so rewarding working with folks here on my side of the county. This is not the first rodeo in terms of downs and ups. And so the down is lower than we wanted, and it's going to maybe last a little longer than we'd like. But start to factor in the fact the seasonality impacts that you're probably already pretty familiar with. Start to think about how those are going to be shaped. And then start to try to look into that crystal ball about what habits are going to be temporary that we've had to adapt to, this kind of meeting stuff, and what other stuff is going to be something that is going to be a long-term. Again, in our restaurant community, a lot of folks are already starting to think about how they're going to redo their layout to allow a little bit more breathing room between people and patrons. So that's it for now, and I'd be glad to talk to anybody later.
Thank you so much, Dale. We are going to move into the Q&A, and we've been able to answer a lot of questions live, but if you don't quite understand the answer that we gave you via the chat, or if something else has come up, please go ahead and type that into the Q&A now, and we'll start to read through them. So I want to start with a question for Dale. Although our other financial experts might have an opinion as well. Specifically regarding the credit card deferments, they're wondering what your experience is with actually trying to do this and how you would go about it.
So the different card companies are doing different things. So first of all, make sure you understand Amex is not going to be the same as Visa, et cetera. Amex's program is for a couple of the different kinds of business card holders. So again, you need to flip the card out to make sure what kind of card you've got. And then there is a simple thing on their website that you can do to say, please, and again, it's not, it's a deferral. So you will owe them the money back, but they're not charging you any interest or late fees. And in Amex's case, it's for 90 days. Other credit cards, it's different. So what I would urge you to do is check with each of your credit card companies that you have some balances on. And that, again, may be a way to defer for a couple of months those payments. And that might just be enough breathing room to get you.
Thank you, Dale. I'm going to have Francis answer this one. We have a lot of questions about seasonal employers and how that would work. We just got a question about the EIDL loan, but I think more regularly we're hearing that question come up with the PPP, how people would calculate their payroll costs for that if they are a seasonal employer.
Sure, can you hear me?
Yes.
Okay, great. And actually, just some new guidance just came out. I think I probably mentioned in the beginning, if I didn't, I should have, that right now we have, of course, the CARES Act, so the overarching CARES Act, and then we have interim final rules. So daily almost, these rules are being amended, defined, FAQs. Some of this stuff is being answered both on the SBA website and also on the Treasury website. And I get for a winter seasonal business, it's not the best answer right now, but for regular borrowers in general, you're looking at aggregate payroll costs from the previous 12 months, or you can use the calendar year 2019 as well. For seasonal businesses, the new guidance says the applicant can use the average monthly payroll for the period between either February 15th and June 30th or March 1st and June 30th. So hopefully that captures more of the seasonal businesses.
Thank you. Can you also help explain, Francis, a little bit more detail about sole proprietors, LLCs with one employee, 1099 contractors in terms of the PPP? I think the question is, should people apply for the PUC, the pandemic unemployment, or for the PPP? And if they did both, would that cause any issues?
Yeah, great question. Thank you. And it's coming up a lot. And Nicole wants to jump in as well. That's great. The honest answer is if you're a sole prop, you're self-employed, you're a 1099, and you don't have anybody else to pay on your payroll, it really is your personal and your business decision. So, I mean, I would set up an appointment with Aaron or someone in the shop and try to figure out, do you go the route of the PUA or do you go the route of applying for EIDL, because you can't apply under EIDL and you can't apply under PPP. You just kind of have to do the math and figure out what works best for you, but you're eligible. Now, as far as double dipping, so Department of Labor just got their rules on Sunday night, and we really haven't gone back and forth to figure out where the double dipping will happen. I think you should just probably expect that you wouldn't be able to double dip.
Thank you. So is the PPP application based on net earnings for self-employment? And if so, how will the forgiveness be calculated?
Nicole, do you want to jump in on that?
I can try the first piece of it. That's how we're interpreting it, is it would be revenue less expenses, assumes that's entirely distributed to the owner. I think that's a good way to look at it. I don't think we have a full understanding of how the forgiveness will be calculated even on companies with employees quite yet. So we've got some time before we'll get, before we have to do those calculations. And I know that we'll continue to have guidance and it's a little up in the air still, but.
And I'll echo that. I think the next round of interim guidance will be on the loan forgiveness side, so that we'll have all the secret squirrel formulas.
Francis, can you use the EIDL loan to pay down an existing business credit card to take advantage of the lower business rate?
Unfortunately, on the EIDL loan, it's really for short-term obligations and working capital, so you wouldn't be able to extinguish debt, a lot of debt.
Okay, and then we're getting a lot of questions about unemployment, so I'm just going to, I'm going to try to type some answers in right when we get off the call, but also want to give the disclaimer that the best source for information regarding unemployment is CDLE, the Colorado Department of Labor and Employment. They're really the experts on that, although we've all gotten to understand it much better recently, and so I will try to answer some questions as soon as I'm done reading things off. The one thing I had, let me look through my notes here really quick. I have one last question for Francis. Can you clarify in regards to the advance? You mentioned about how it's now being calculated as $1,000 per employee. So does that mean that sole proprietors would not be eligible for any amount of that EIDL advance?
Actually, for EIDL advance, you could count yourself. So you're an employee of one. So, I mean, unless you did, have other employees. And by the way, the definition of employee under EIDL advance doesn't distinguish between full-time, part-time, or seasonal. So that's one thing I didn't say. But yeah, you'd be eligible for yourself.
Okay, so you would be capped at $1,000 basically.
Yes, ma'am.
Perfect. It looks like we went through all the questions and we're wrapping up on a perfect time. So thank you so much to all of our panelists. And I just want to remind everybody that today's presentation, along with the slides, the recording, and the typed out answers to all of these questions that we tried to cover pretty rapidly, all of that will be found on the website that's on your screen, northwestsbdc.org/COVID-19. And there's a fantastic compilation of other resources available at the Choose Colorado website, which is the Office of Economic Development and International Trade for Colorado. They have a lot of great links on there, including the link to our state SBDC website. Finally, for other resources related to entrepreneurs and entrepreneurial communities, you'll want to check out startupcolorado.org, who is helping us to sponsor and organize these phone calls. So thank you for all of those. I will stay on for just one more minute to make sure that I've answered all of the questions in the chat, but stay tuned for more information next week. And thank you to everyone. Talk to you soon.